Today has been an absolutely historic bloodbath for the crypto markets and for Bitcoin in particular, but I'm not surprised. We did see this coming. I'm going to explain exactly how we saw this setting up so that hopefully we can prepare for the next time that this happens, because it is sure to happen again, and hopefully we can make some money out of it, because down days like this are one of the biggest opportunities that we have to take outside gains out of the market if you're still in the game, if you haven't overexposed yourself, and if you haven't been absolutely wrecked like the other $19 billion worth of liquidations that went through today. Let's get into it. So a quick recap on the situation. Although we were at new all-time highs of $126,000 plus just a few days ago, we are now down in the gutter, currently trading at a price of $111,700, but we reached prices as low as $107,000 and even lower than that on some other venues. We know already it has been a historic day for liquidations. $19.36 billion worth of liquidations over the last 24 hours. The majority of those leverage long positions, $16.85 billion worth of long leverage was wiped out of the market in just a few hours' time. I want to explain to you today why we saw this coming and how we can read these signals and we can look out for the danger signs to see this coming again. And in fact, we shouldn't be seeing these as danger signs. We should be seeing these as opportunity, because when the market crashes this low, that is the time when the big money, where the serious money, the money that always wins, scoops up coins and holds onto them, and they do not let go once they scoop up coins in that way. So let's get right into it. I want to start with some receipts, okay? Because since we started breaking all-time highs, everyone was getting excited, and I was suspicious, and I was actually getting short at the last two breaks of all-time highs. Let's run back a couple of the last videos, and I can just show you, in fact, where my mindset was at those times, and hopefully that contextualizes this a bit more if the goal of this is to see this coming the next time round. Actually going short today. We are currently at a price of $123,922. Bitcoin is just a few dollars away from the all-time high at $124,371. I'm actually going short right now. Now, there's a couple of different reasons for this. This is definitely a high-risk strategy, right? I'm not looking to exit the market in terms of selling out of my long-term positions, but I do see a short-term opportunity here, and that's for a number of different reasons. So I am short currently from $124,087. As you can see here, this trade is on fairly high leverage, right? 20x. I'm using leverage in this case to manage the risk of this. You can see we're currently up $221 on this trade. I am targeting around $110,000 for the initial move of this trade, but I am willing to scale in. The thing is, I can see, once again, an imbalance in leverage in the market, and this has been consistent over the last, the 7-day profile. You can see there's just massively more leverage long positions in the market than there are leverage short. That means a lot of people are getting in the market on borrowed money. They're levering up their capital to increase their exposure to the market right now, and as we know, as we are very familiar with, when traders trade with money that they don't have, they can get into a situation where they can become liquidated, i.e. forced to sell out of that position, and that can put rapid selling pressure on the market. So this isn't necessarily in itself a reason to get short. Okay, this means that right now there are a lot more people long in the market and people long on leverage, but that's not in itself a reason to get short. But there is an imbalance, and that means if we break all-time highs and the result again isn't very exciting, and it might be, okay, it might very well be the time that Bitcoin actually breaks through the all-time highs and we rip up into price discovery. But if that doesn't occur, there are plenty of leverage longs here to liquidate, and doing so a second time, right? We saw the miniature version of that yesterday. If that is to happen again, I think the result might be even more dramatic than we saw yesterday. We are right now, at the time of recording, about to challenge this low that we put in on the 7th of October, down at 120,656, 120,650. And we can see, if we look at the CoinGlass liquidation map, there are approximately $57 million worth of long positions that will be wiped out of the market if we come down to break through these lows. And it's looking more than likely that that's going to happen now. As this situation, okay, there are going to be more than likely a lot of liquidations before the evening's over. So there you go, there are the receipts. We were shorting the top. We were short from originally $124,000, give or take. And had that played out, if we take a look at a leverage calculator here, at the peak, that position was worth 0.8 BTC. We were in from $124,000. If we had played that all the way down to current pricing, right, at 111,000, fine, I'll make it 112,000, same difference, okay. On 20x leverage, that would have resulted in a $9,600 positive P&L, okay, a massive win. Now, let's just take a deep breath. Okay, let me not start ego tripping on this. Yes, we got out of that short position, and in fact, we started looking for longs. Now, I'm going to get into the reasons for that in a second, but what's really important about this is how we saw the setup coming. And the reason for that was two main things. First of all, leverage in the market, okay? The profile of the BTC liquidation map looked totally different a couple of days ago, okay? We had almost the polar opposite of this. On the 30-day time frame, actually, it was all long leverage, okay? And you could see that. You saw that in some of the video clips that I just played. So you could see that there was an unprecedented amount of long leverage in the market. And that really was unusual from what we've seen. Okay, we're used to seeing a lot of leverage in this market. We see it on both sides. It's very, very easy in the crypto markets for retail to deploy leverage. And what we know, right, from experience is that retail loves jumping in after a move is happening. Okay, they see moves like this up move that we were having from the lows that we put in at the end of September. They see up only price action, and everyone was just stacking in on more and more leverage. It's like every single day the price was going up, more people jumping in on long leverage. And at a certain point, that gets to a place where if prices come down just a little bit, that liquidation risk gets higher and higher as the likelihood that those positions are going to become liquidated increases. And the second thing that alerts us to that happening is when you've got very, very simple price action like this. Okay, price goes up, price comes down a little bit. Price goes up, price comes down a little bit. Price goes up, price comes down a little bit. That's just such a basic, classic uptrend, right? A linear trend, in fact. Price goes from A to B in more or less a straight line like this. That means there's a lot of places where it's very easy to see where people are likely to be placing their stops, okay? So areas like this, areas like this, areas like this, people like placing their stops at lows like this. And when you can see there is a huge amount of long leverage in the market, where you can see there is a lot of places where it is very obvious that inexperienced retail traders using leverage, using money they don't have, are going to be placing stops, you can see this tinderbox situation forming. If a lot of stops go off at the same time, that means a lot of people are forced to sell. They're selling in surprise, and they're all doing it all at once. Oh, shit, let's get out of the position. But they're not actually saying that, right? It's just happening because the stop loss is an automatic sell order. Even worse, when those positions or those accounts become liquidated, then they're really forced to sell, okay? The account is literally selling out their entire position, and the market makers have to dump that onto the market. And that means, once again, you get supply shock. So you get situations like this where, okay, we know there is a stack of leverage in the market. We know that it's very, very obvious that that is going to become shaken out if prices move down just a little bit. And you can see patterns like this happening, okay? Slow breaks to the upside, scurry down. Slow breaks to the upside, scurry down. You can see that the momentum is just not there. It's not like back in 2021 where you could actually buy breakouts of all-time highs and we just go to the moon. It was like the easiest trading environment ever. The market has matured. It's not like that anymore. And on top of all of that, we know that there are big players, big institutional money now has a vested interest in getting as much Bitcoin as possible, the likes of BlackRock, etc. And we know that their wallet essentially is so big, they're in a position where they're more than happy to wait. They're more than happy to bully markets potentially to the downside. They could see this stuff as well, okay? I'm not a genius, right? But there's a lot of geniuses working at BlackRock, and they are very, very well funded, and they know this stuff as well, okay? They can see how much leverage is in the market. They can see how fragile markets like this are becoming, and they have the capability to bully prices down to those levels to their own advantage. They can bully prices down, wait for those liquidations to come, and they can just sit back and scoop up the coins at lower prices. That is how we try to trade, okay? Now, I want to just caveat this by saying, obviously, I didn't call the top, and I don't think this is the top of the bull market or anything like that. I don't think that, I'm not claiming that a massive short position that I wasn't in was a great, fantastic move, okay? The reason we got out of that was because this was becoming higher and higher risk, right? We scooped up some money out of this short. We scooped up some money out of this short as well, and then we started looking for longs. And the reason I pivoted this strategy from being giga short was because we weren't quite seeing the reaction happening to the degree that I wanted to, at least to play into those targets. I mentioned 110K as a target in that first video, the clip that I played just now. That would have been absolutely great to see. But what we wanted, right, was a move like this. And it turns out that for that to happen, we needed a catalyst like the one we got last night, which was Trump threatening further tariffs on China. And that is essentially the spark that lit the tinderbox, which was already set, okay? The stage was set for this scenario, but we didn't quite get enough pain. We didn't quite get enough pain to really dive into the depths of that long liquidation risk until now. And that's what's happened now. As I say, the fire was set, right? It was all ready to go, the wood was dry, etc., etc. And then we got that spark and all the cards came tumbling down. But the takeaway from this is you can see those situations set up and you need to be ready for it, okay? A lot of people suffered a lot of financial pain over the last few hours. And it's a great shame, okay? It's down to the reasons that we described, right? People getting in on too much leverage. But you can protect yourself from that. You can protect yourself from that by having stop losses, not trading with a ridiculous amount of risk in individual positions, and not risking a huge amount of your capital on a futures trading account. And understanding and knowledge of this is why we're still here, and now we get to capitalize on this massive discounted buying opportunity. As always though, that is purely my opinion. I'm sharing it just for entertainment purposes. Nothing I say should be considered financial advice, but there is plenty more where that came from. Thank you for listening. Catch you in the next one. Bye.